Welcome to Forex Gheto, the place in YouTube to analysis different guru strategy and learn. Please subscribe, like and comment. Let's get into it. You feel me? Yes, let's get it.
Gheto. This is the only channel we analyze different guru, pro trader, where their strategy is, where is the magic. So let's get it done. This is Falcon X, one of the best Forex trader I ever seen. So they're talking about three things you have to know before starting trading. Come on guys, let's get to it.
Right guys, so I was going to just talk about this part, but I thought, you know what, it would be perfect to just put something on the board just so you can reference. So essentially, these are the three things. So we have processes, and we have minimizing the monetary impact and forecasting. These are honestly, guys and girls, these are the three things. You know, there's lots of other tiny little things, but you know, three things that come to mind are these. These are huge, and I spent way too much time either not having the right process or not understanding the monetary side of things, and especially this part here, which we'll come to. But first part, let's look at processes. Why are processes important? Well, essentially, what you'll find is as a trader, having a great process will give you a great outcome. What we tend to do is we tend to focus on the outcome. So for example, if you're a trader right now and you're looking to get into Forex, or you've just got into Forex, or you might have been in Forex for a while, you'll probably find that you haven't asked yourself this question enough. What are my processes? And you'll tend to find you'll focus on, you know, how much money you can make, how much profit you can make, how many pips you can make. You'll be focused on that without even realizing so much, without having good processes. Now that can come in the form of journaling, come in the form of a trading checklist. Trading checklist, this is one that, you know, it gets talked about a lot, it gets spoken about a lot, but not enough. And the reason why I say that is that asking good questions in trading is single-handedly one of the most important things that you can do. And the reason as to why is that when you ask good questions, for example, I was speaking to someone, one of the students on a podcast recently, and what he does is that he draws his patterns on a post-it notes, right? Now, what he does is he always refers to that because he's got his trading plan, he's got his post-it notes, and then he realizes that on that post-it note, these are the trades, and sometimes trades can look similar, right? But if he's got them right by his screen before he takes a trade, he does a quick cross-reference, looks at it and says, well, is this part of my plan, or does it just look similar, or does this just look good, right? And then what he does by doing that, he can then cross that off and realize, well, does it meet the criteria, does it fit my plan, etc, 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 because some people have trading plans but they don't follow them. And you'll find that, I mean, how many of you felt the same way, where you have a trading plan, you actually have one, but you don't even reference whether you stick to it. So 3 weeks goes by, you don't know whether you're sticking to your plan or not, you just think that you might. Having little details like that are huge. So asking good questions, this is one of the single-handedly one of the most important things that I wish that I did. I didn't have any processes at all, you know, from anything, from journaling to trading checklists, you name it. I was just kind of just going with, oh, this looks good, this feels good. I'll decide that I'll risk this much because this feels right. And it's crazy that thousands or probably hundreds of thousands of traders right now are doing the same thing. They're just not asking good questions and they're wasting so much time. Have good processes, figure out what process works for you. Second point, minimizing the monetary impact. Now, actually, I'll write something on here. So let's say, for example, we've got, let's say a £10,000 account, just write that roughly, 10K, and you're risking 1%, right? So if you're risking 1% per trade, you're risking £100 per trade. So let's say, for example, you're risking that. What people will do, if you've not, you know, fully grasped this, let's say if this figure, this 10K figure, is a lot of money to you, you will put so much importance on that figure and think that, you know, I'm trading 10,000, that's a lot of money to me. And then what you do is that when you place the trade, you forget about this figure. You forget about the 100, you forget about the 1%. You know, that's assuming that you actually risk 1% per trade. But let's say that you do, I'm assuming that you risk 1% per trade. You forget about the £100 figure. And why is that important? Because look at the difference between that 10K and £100. That makes you feel emotional. Why is that? Because when you're placing a trade, you're thinking about the 10,000. You're thinking about the whole amount of money. But the truth is, you're just risking 1%. You're just risking £100 out of that account. And what I wish that I did, especially this is true with scale, as you scale up your account, you get better results, you become consistent, you're confident, and you say, right, I can trade more money now, you know, I'm comfortable with that. What happens? You go from 10K to, let's say, 50K, and you're not used to risking that amount. So what do? You take on the emotional weight of the end figure, which is 50K, rather than saying, well, it's actually only £500 per trade that I'm risking. Let's go to 100. You think, oh, I'm trading £100,000. Well, hold on a minute. You're actually only risking £1,000 per trade, 1% risk. So I'm assuming that you stick to 1% risk. So it's just understanding how to minimize the impact, because it would have saved me a lot of time. I mean, I remember I wasted something like 7 weeks at one point just because I was taking on the emotional weight of a larger figure, and I found it difficult. I really did. And for some people, they find it a smooth process. They go from trading 5,000, 10,000, 20, 50, 100 plus, and they have a smooth process. But for the majority of people, you will incur some type of emotion. So 2 things so far: having great processes, and if I could at the beginning just really understand, or have the guidance, if you like, to minimize the impact of the monetary value, that would have changed so much. I would have saved myself so many years, and I think I would have scaled a lot quicker. So good 2 tips there. Third part is forecasting. Now, arguably forecasting, this could arguably come in processes, but it's so important that I wanted it to put it on its own. So forecasting the possibilities, forecasting the probabilities, very, very important. The reason why forecasting I hold, so greatly is because if I would have learned how to forecast at the beginning, if I had some guidance, my mentors back then when I first started learning with stocks at 18, and they said to me, Mark, what I want you to do is I want you to focus on processes. I don't want you to think about the money side of things. I want you to focus on the actual amount that you're risking. And also I want you to forecast. Why do I want you to forecast? Well, I want you to start training your subconscious mind to be prepared fully for the probabilities, the possibilities, understand the probable and the possible. You've probably seen a video that I've done before on YouTube about the probable and the possible, and just really understanding the fact that when you can learn to map out those scenarios, so let's say you're trading, you've got a trading week, you understand that, right, this is probable, this is possible. And then you understand, well, I'm looking at, let's say you're looking at euro dollar for a long. You're looking at euro dollar long, and you're thinking, well, when it gets to, I'm assuming that you trade support and resistance right now. We don't, but I'm just assuming. Let's say you've got some support, and that you're looking for a rejection on that support. And then you're saying, right, when it gets to that area, then I'm interested. You might think that's good, right? When it gets to that area or that level, I'm interested. You might think that's a good thing to do, but the truth is, that creates a reactionary mindset, because then what happens? It does get to that area, we start to see some rejections, some volatility, some spikes, and you start thinking, should I place the trade? Shouldn't I place the trade? What should I do? Is it my plan? You start asking all of these questions that essentially cause you to hesitate, feel the emotions, anxiety, and forces you to either not take the trade or get in too late or too early. Why is that? You haven't forecasted, you don't know the possible scenarios. So what we do is that, let's say there's a similar sort of area of structure, we focus on patterns. Let's say it's at an edge of the pattern. We know if it gets there, what are the possible scenarios? So will it create a third touch descending channel? Let's say we're looking for a buy. Will it create a retrace? Will it create an override? Will it create a double bottom within the pattern? And if it meets any one of those criterias, does that fit my plan, and will I take the trade? And then what that does is it starts to get your mind used to predicting price before it happens. And if you can predict price before it happens and feel comfortable with that, you'll find that your trading will just take a whole new level, and you won't have that fear of missing out anymore, because you've already planned out, let's say euro dollar or dollar CAD, for example, you've already planned out, right, when it gets to that area, in my plan, I would trade it this way, or this way, these 3 ways. And these are high criterias. So if the first one doesn't happen, for example, you're not feeling emotional thinking, oh, fear of missing out, I need to get in the trade. You take a calm approach and say, right, this hasn't happened, that's one thing crossed off, I'm not taking that. Right, what else may happen based off of this pattern that I've back tested, which is the key, back tested, and I've seen present itself in this type of structure or this pattern. You'll see, okay, it normally does this, and it normally does that, perfect. Have I got that scenario mapped out in my mind? Have I drawn it out? Have I forecasted it? Have I got a before and after? Yes, I have. Well, then guess what? When it actually comes to playing out, you've got much less hesitation. You're feeling confident because you've already seen it in your mind based off of previous data and patterns that repeat themselves over years and years. So this was one of the most important changes for me personally. And I wish I was guided at the beginning. Honestly, that was the biggest thing out of all 3, for someone to tell me forecasting, because it helped train my subconscious brain. Now, you got to understand that your mind's a muscle, right? Your brain's a muscle. It's exactly the same as you're training in the gym. Forecasting is like a bicep curl for your brain. Guys and girls, these 3 processes, these are huge. And, and although I could go into numbers of other things that will help you, things like, back testing that I alluded to earlier. So back testing is, of course, another important thing, but these very, very proactive. And you want things that make you proactive. And just touching on the back testing part of things, understand that back testing is essential. It's not something you need to be doing every day, But once you've backtested, you understand the possibilities, the probabilities, you've trained your mind subconsciously, you need things that are going to make you proactive in the market, which is things like forecasting, having great processes to ask good questions, to encourage you to take good, high quality trades. Minimizing the impact. This is going to be a big thing that nobody really talks about, but you need to know how to sustain it. You need to know how to scale. You need to know how to deal with that monetary value before it's happened. The last thing you want to do is start getting great results. Someone chucks 100K at you, you haven't got a clue how to deal with it. You start risking way too much, jumping in too early, you get emotional, and you go backwards, you go the other way. So be prepared beforehand. So I really wanted to make a video on this because this is just short and sweet, gives you guys and girls some value and something that I wish that I knew these three.
Man, that is Falcon X. 3 things I wish I knew before starting trading. He's very cool. He's a cool guy. Subscribe to their channel. Try to go and have their mentorship, and it's a big family. And then I recommend them 100%. Thank you for watching, and don't forget to subscribe to their channel. I will leave the link below in the description.
Things I would love to know. Is there anything that you wish that you knew when you first started? Is there something that you know right now that's really helped and really clicked for you that you wish you knew? I would absolutely love to know that.
You know, these things are very important when you come to trading because of people see flashing with their car, traveling around, but those people take years time before they'll be traveling, you know, because of you need to train the brain. You need to train yourself to be part of the program itself, you know. So shout out to everybody. Like, subscribe, comments, and then let me know which guru do you think I should go for. But Falcon, they're the best. Trust me.